Realized vol. So looking at the realized vol, we did see it come down about 10 points on the week. So back down to around 30%. We didn't see a breakout, obviously, of the ranges. So kind of those ranges being respected and vols coming back down. So 30%, what does that mean? It equates to about 1.6 move per day. So remember, in crypto land, you got to take the vol, divide it by the square root of 365, which is closer to 1819. And that will give you your daily move, right? Because we have 7 days a week of trading in crypto, whereas in developed markets, in TradFi markets, we have more like 252 business days a year. So that's why we divide by 16 to get the daily move. Implied vols getting hit around 5 points and not down quite as much, not down 10 points like the realized. Couldn't keep pace with the realized, and that's why variance risk premium, or volatility carry as I like to call it, has come back in at about 10 vol points. So you can see here, this blue shaded area is your carry that's come back into the curve. It's that spread between basically the implied and the realized. So for the gamma sellers, it looks quite attractive right now to be harvesting a bit of risk premium. We would expect that implied vol to come lower later this week once CPI is out the way. If we haven't broken the spot range, it's very likely that variance risk premium will come down to something closer to 5 points. So I could easily see 5-point decline in the front end of the curve there. But we are already looking at pretty low implied vols in the front end at around 40%. But I still suspect it can go lower if things kind of stay as they are. Okay, looking at the term structure, we've kind of got a slightly different layout here. We've got the actual individual vol levels per expiry, the changes. You see the front end was down around 5 points on BTC, but anything in 2024 was actually firm, unchanged to slightly higher. So we saw the curve going into contango, led by that front end coming down. And then Ethereum, similar story, front end coming down, back end actually going up by more. So about 2 vol bid in March 24 expiries, and the front end down as much as 7.5 vol points. So very much a pivot happening around that year-end maturity, where anything longer than year-end is getting bought, and anything shorter than that, particularly in the front end, is getting whacked because the realized vol just hasn't been good enough, right, to kind of pay back your theta bills. Okay, relative value, the ETH BTC vol spread did briefly flip into positive again in the front end of the curve. That got smacked. So you can see here the difference between BTC and ETH. BTC trading over by about 2 vol points across the entire curve, as ETH failed to break out, failed to give us any material uptick in realized vol, and has come back down. So that is the vol market's way of saying but continue to believe BTC will dominate crypto price action, right? And that's what I would say that vol spread trading at 2 vols over, that's what that's telling you basically. Now, we had said we need sustained realized outperformance from ETH if we were going to see the spread stay positive. We didn't get it. And like I said, that downtrend in ETH BTC cross is basically confirming that. So that's what the vol curve has basically got reverted back to, in our opinion. Okay. At some point, ETH may come alive again, but it really does need an ETH specific narrative for that. Okay. Looking at SKEW. SKEW's been quite volatile this week, especially the front end. If we look at the front end BTC SKEW, it was started the week at kind of +5, went all the way to -4. So that was for puts over when it goes negative there. And then it's bounced back to flat to slightly positive. The long end SKEW's been much more stable, trading at like 4 vols for the calls over. Okay, that's kind of what we got there. So most of the curve back into call premium, but the front end definitely having less of a call premium than the back end. And that's kind of what we said. We'd flagged last week that short dated SKEW was likely to reverse pretty quickly into puts if spot dropped. Spot did drop. It popped below 30k for a minute, and we saw that put SKEW go pretty big in the front end. Okay, whereas the back end SKEW kind of didn't really care and stayed pretty firm the whole time. ETH SKEW was down even more, fell uniformly across the curve. So it's kind of this trend lower across the curve. So we're seeing back end at around 2 points, calls over, and we're seeing front end at around 1 for puts. So the puts have stayed. The front end SKEW in Ethereum has stayed in put premium. It got to -4 as well on that initial drop last week. but it's actually not managed to get back into a call premium. It's stayed in put premium. And that's just basically, what we've been seeing all year, right? Where the Ethereum put SKEW has been much faster to catch a bid because everyone thinks there's no safe haven bid to Ethereum like there is to Bitcoin. And if we do get sort of risk asset weakness, and if crypto joins the party, then ETH's going to get pulled down more. Basically, that's the theory, and that's what that SKEW is kind of indicating. Yeah. Okay. Looking at flows, volumes did drop off a bit this week due to lack of volatility. We often see that. Some large clips did trade though still. So on BTC, we saw December 40K calls getting bought in decent size. $5 million of premium got spent. We also saw the SEP 38 calls and some March call spreads, 35, 50K call spreads. That's how people are expressing their bullish views. We saw some bullish risk reversals also across the curve in July and December. An interesting downside trade that we saw was this put ratio in September getting sold. So someone's selling the 27K 20 delta roughly puts to buy 2 times the 24K puts, which are 10 delta. So buying downside convexity there, basically paying about 3 or 4 vol premium for that downside strike above the strike they were selling, which isn't a massive premium given how deep out of the money that stuff is. Because what we're basically saying is if crypto was to go back down there into the kind of the low 20K zone, that's a significant drop where vol is probably repriced from like 40 that it is now back to like 60 or 70. So you'd kick into a load of Vega if that drop happened, and you do pretty well, and you're not paying a ton of premium for that exposure. That's the idea. Okay. And then outside of the flows that I've already mentioned, just seeing sort of usual two-way flows on Gamma, but in general, pressure coming because realized vol was so bad. Okay, looking at Ethereum flows, once again, pretty bullish, particularly in the longer end of the curve. Outright calls getting bought in December and March. So that's a 22, 24, and 3,000 strikes. And then the March 23 calls going up in decent size. We also saw some chunky call spreads. That's these red bars on the chart here. So we saw the 1,900, 2,800 call spread and the 2,000, 3,000 call spread, right? So roughly 1,000 point wide call spreads getting bought out to March 24 is a way of keeping your Vega exposure down and just getting some leverage to the upside on those trades. And then put wise, we did see some 14th of July. So this weekly puts in case the CPI spooks the crypto market. So seeing these pink bars with just some put buying in the 1800 and the 1850s. And then again, the usual gamma flows that we're seeing coming in on the 1900 at the money stuff, generally gamma sellers delivering the street a bit of gamma there. And we can see that if we look over at our gamma positioning, you can see that Ethereum gamma positioning is rising. So you've got this long strike building here in 1900. We're seeing a little bit of an uptick there in Ethereum gamma, street getting longer. In terms of Bitcoin, not a whole lot going on. We obviously saw that big spike into expiry as the shorts rolled off, and we kind of been chopping around. We did get a little bit short as the market rallied, but now we're back to a more neutral level here. You can see we do still see a fair amount of short interest above 3,100. So we think the dealers will get shorter gamma if we break to the upside. But for now, whilst we're hanging around at 30, 30 and a half, it seems to be quite neutral. Okay. Now it's too early to call, but we do think there's a similar setup in Ethereum like there was in June expiry. As the weeks go by, as we get closer to that end of July, if we continue to see more 1,900 strikes getting sold to the street, that's going to act as a bit of a pin, delivering the dealers more gamma there. And we may then see another opportunity to play that pin, because we do think that the kind of gamma positioning and the systematic flows in Ethereum seem to be much larger on a relative basis, and therefore they're having more impact on the market. So that's something we've been keeping an eye on. And like I say, if we see an opportunity to play the pin again, like we did successfully last time, we will let you know. Okay, so that's what I'm seeing in positioning. So I'd say positioning quite neutral, getting longer in ETH and pretty flat in Bitcoin, but it's likely to have more impact in ETH. Looking at what I've been up to, that's it for this week, and we'll catch you guys next week. Thanks.